Good morning, Michael. It's so great to have you today. I'm really excited to hear your take on what's happening in the stock market today as an expert. And so if you just don't mind, can you just share a little bit about yourself for our audience before we kind of dive in and talk about what's happening in the world?
Sure. Thanks for having me, Rebecca. I came out of Berkeley Business School and Statistics Department. I was hired into Salomon Brothers. I was at Salomon Brothers for about 6 years. Back in the glory years, I started out with Laszlo Barini market analysis, ended up being the quantitative strategist in proprietary trading for equities. And I left there and I've been doing the Belkin report since 1992, 33 years now. And I'm an advisor to hedge funds, big sovereign wealth funds, private family offices all over the world. I also published the Belkin gold stock forecast. So I have a special interest in gold and gold stocks.
Oh, very cool. So speaking about gold's obviously at record highs. I'd love to kind of understand, why it's trading at such high prices and what that kind of means, and what, are you making predictions about where you think gold might go? Like, I'm just, super curious to dive into that.
Sure. So gold and gold stocks have been my number one long recommendation all year long. Mm-hmm. And it's kind of crazy. Last time I looked, the GDX gold stock ETF was up about 125 or 130%, kind of lost track here. It's up kind of every day. It's a little bit scary, but I mean, I started out recommending these things. So I have a forecasting model, right? It's based on time series analysis. And I make recommendations on sectors and groups to big hedge funds and institutional investors. And gold has had an outperform rating all year in the model forecast. I also wear the investment strategist hat, which is separate from the model. So that would be why is something going up. We have big debasement. We have a lot of credit creation. Even though the Fed has been tightening, supposedly, bank reserves are still at a ridiculously stimulative level. And Powell actually came out yesterday and said, we have to stop doing quantitative tightening because we want to leave bank reserves above our target level. So it's no mystery why gold is going up. I mean, central banks are creating money. Also, central banks are buying gold. So gold is now what, 4,200 something today, right?
In America.
And it's. I remember at the beginning of the year, in the Barron's Bank of America fund manager survey, they said gold is the most crowded trade. Right? That was like $1,000, $1,500 ago. So the big institutional investors have missed this. Okay, it's gold. They hate gold, and gold stocks in particular are really interesting because they're all in sustaining costs. That means that everything they spend to produce an ounce of gold is around $1,600. So with gold at 4,200, they are making a boatload of money. Their margins are ridiculously high. And the GDX actually has 16% short interest, and it's had hardly any inflows until recently. So gold stocks are kind of the hidden play on gold. And where some people, certainly my clients, have been on board and are up enormously this year in the gold stocks. I still think it has a long way to go. It's really an under-owned. It's not a crowded trade at all, gold stocks. So I have some picks there. We can talk about that a little bit later.
I've always felt like gold was an underloved stock. I mean, so much attention has gone into obviously things like Bitcoin, and those that's captured a lot of investors' attention, and I feel like gold's been ignored. And now it's just, and when you're making these kind of gold stock investments, are you looking at some of the majors like the Barricks, or are you also including some of the mid caps and juniors?
Yeah, all of the above. So when I started the gold stock forecast report about 10 years ago, I cover all the investable gold stocks that trade around the world. That would be Canada, US, London, Australia, China, and South Africa. And not moose pasture. Okay, so moose pasture is, Mark Twain's definition of a gold stock is a hole in the ground with a lyre on top. I don't cover those. There are certainly some opportunities there, but my clients are big institutions, and it doesn't move the needle to buy something with a $25 million market cap. So basically, I'll give you a few names here. So Barrick was a big pick for me about 2 months ago. It had underperformed. It moved. So the model rotates in and out of things. It likes to buy low and sell high. So that would be in relative terms too. So it's always looking for outperformers and underperformers. So I'll give you 3 stocks that the model likes right now. They've moved a little bit the last few weeks, but they're off the beaten path a little bit. So the first would be B2 Gold. That's symbol BTG in the US, BTO in Canada. It's a 1 million ounce producer. It's below its 2000 peak, and gold is like more than double that level. So it's been a total underperformer. The fund managers don't like the CEO of the company. They call him something that I can't repeat on air, but basically he's not a popular guy. So, but that makes it it's an underloved, underfollowed stock like BTG, B2 Gold. Another one is McEwen Mining. That's symbol MUX. Again, another underperformer. Just started out popping up the last few weeks. And the third is First Majestic, which is a silver miner. Again, another one that has underperformed. So the model likes to buy things that have underperformed, that are turning up, and it likes to rotate out of things that have moved too much. So those would be the 3 picks: B2 Gold, McEwen Mining, and First Majestic Silver.
Yeah, great picks. I think that's interesting that they're picking those ones up. Absolutely. I guess that what does First Majestic trade at today?
Okay, let me give you. So
I'll look it up. And so it's picking these 3 stocks because it thinks that they're undervalued.
Yeah, so $14.63, First Majestic, currently. So basically,
I made
believe it or not, so in the gold space, there are a few brokers in Canada, obviously, that follow these, but there's not a horde of analysts following these companies like there is. So for like Mag 7 stocks and the US tech stocks, there's 10 analysts for every stock. So I think basically the gold stocks are an inefficient market. There's things that fund managers just don't know what's going on with them. So that means that things are mispriced. So you get this mispricing where some stocks are just ignored and out of favor, and others. So the gold stock rally was led by majors, like Kinross, Agnico Eagle, things like that. Those are holds to me, but the model's always looking for things that are going to outperform in a space. So in gold, I gave you those 3 names. The others are kind of holds. I think the gold stocks keep going up, even though it's kind of scary. If you look at the charts, it's like, whoa, these things are skying already. And a lot of people are heading for the exit saying, it's up so much, I want to short it. No, not me. I think it goes higher. I think we're in the middle of a really historic gold and silver rally. And by the way, silver, there's not enough silver for the ETFs, right? They're closed. There's a shortage of silver right now. The silver ETFs that buy silver, physical silver in India, are closing because they can't get physical silver for these things. So this shows you there's a real squeeze going on in the metals market right now.
Absolutely. First Majestic. Yeah. Oh, $20 today. Good for them. That's really interesting. Can you explain your model just again? So exactly how it works one more time?
Okay, right. So I developed this based on my studies of time series analysis when I was in the UC Berkeley Business School in statistics department. I was developing systematic trading strategies back then, and then I learned to apply it. So basically, the model gives a 12-period forward forecast. It's different than anything that anybody else is doing as far as I've ever seen. And so it gives direction, position, intensity. It's not like a chart, technical analysis where it ends today. It's looking forward. So I'm looking for turning points. Again, looking for outperform, underperform ideas. I do have to, digress a little bit here. My overall view on the stock market is terrible. So I think this is a huge bubble. So the long-term forecast for Mag 7, NASDAQ, all those kind of things, European indexes, Hang Seng, major long-term top, like 2000. So the monthly forecast points down, just like it did in, say, December 2007, before the S&P fell 50% or more, or the same way it looked in March 2000 at the top of the tech bubble when the S&P fell by more than 50%. So I'm not a fan of the overall stock market. And if you look, say, at the Mag 7, which are supposedly leading this, there's an ETF for those MAGS. That thing topped out on September 22nd. Wow, that's a month ago almost, right? Look at that. So the supposed leadership of this market has been rolling over. So I think tech is really super overowned. I do not like it. I think they're more short opportunities there. And I think the market is looking for an excuse to go down, and it's been inflated by passive inflows. So basically, my clients are discretionary investors, right? They can decide to be in or out of the market. And so the market is inflated by CTAs who are long up the wazoo at the moment. They're super long the market. I think they're going to be a force of liquidation. And passive inflows are basically the definition of dumb money. So the dumb money is super long the stock market at the top. Even my neighbor's gardener, you know, God, of all people, she has a beat up truck. We love her. You know, she's a wonderful person. But like Gardner is like talking about stocks. You know, reminds me of right before the 29 crash, JP Morgan, his shoe shine boy said, the shoe shine boys have a bunch of money, $40. We'd like to invest with you. Can we do it? And JP Morgan went back to his bank and he sold everything. He said, if the shoe shine boys are buying, there's nobody left to buy. That was before the 29 crash. So I'm overall bearish, but I think the stock, by the way, gold stocks could massively outperform. I'm a little bit nervous they could get dragged down, gold stocks, but they're not part of the same bubble, right? So the central banks are buying, there's support for gold. If it trades down, the central banks will keep buying. So I think gold is the place to be, and the overall stock market is not.
Right. I think that's definitely the sentiment that I've been hearing as I speak to, professionals like yourself, is just how it does seem like, the Mag 7s are, at a bubble point. And then with these gold and silver and copper and these resources have been so ignored for so long. And they really have tangible value, especially in the way that the world is going right now. And so now it's starting to flood into it. And one thing that's been so interesting is just how much money is being raised in these companies. Like there's a tremendous amount of, $20 million, $50 million massive raises that these mining companies, gold and silver companies are just successfully doing right now. And so do you still think this is very beginning, early stages for this sector?
Well, I wouldn't say beginning. So when I started recommending them, nobody wanted to touch them with a 10-foot pole earlier this year.
Totally.
So, by the way, there were outflows from the GDX for 10 months until August. So August, the GDX, that's the gold stock ETF.
Yeah.
It had billions of dollars of outflows while the stocks were going up. It was the weirdest thing. At one point, the GDX was up more than 50%. And they had nothing but outflows. So that shows you, it's basically the flows have not really started going into these things yet.
Right.
So by the way, let me just say, one of my clients is Alpha Capture Hedge Fund, and I'm allowed to speak in my performance there. So basically they put all your ideas, I'm allowed to put in 50 stocks, and I've had a lot of gold stocks in that. So I was up 59% market neutral in Q3. Wow. And I'm up 18% in Q4. I'm not boasting, believe me. Pride comes before a fall. I've learned that the hard way. You don't want to stand up and pat yourself on the head and say how great you are. But I'm just saying it's working, basically. So that's alpha capture means it doesn't matter if the market goes up or down. It means what did your stocks do relative to the market? So these gold stocks are massively outperforming. And I believe the forecast is they will continue to do so. That's the place to be if you're an individual investor, family office, hedge fund. I would be looking at this at gold mining shares, silver mining shares.
I feel like I've noticed a lot of these gold and silver stocks really make a change, an uptrend change in about June this year. Is there any reason why that might be the case?
Well, so gold was going sideways. Like I was more like July, August. So the gold stocks started taking off, but gold kind of plateaued, and then it started taking off in August. So I think August is where the afterburners began to kick in, and basically we're in a momentum phase to the upside now, and there's no telling where it ends. Like that's my model is supposed to spot these kind of things. I'm not seeing a long-term top. So the long-term forecast, XAU gold stock index relative to the S&P up, and it gives you, again, the model gives direction, position, intensity. So we're maybe like midway and like third or fourth inning. If you're watching the World Series, it's like watching the Blue Jays versus the Seahawks. We're in the third or fourth inning probably of this move.
And they're playing tonight, aren't they? The Blue Jays and the Mariners.
Yeah, Mariners, Seahawks. Sorry, I got my teams messed up here.
I look at First Majestic, and just how in the last 6 months it's gone from about $7 to $20. Like what an amazing run!
Right, but if you look at a longer term view, again, it's barely back to its 2020 peak. So look at a monthly chart on these, and most of the other gold stocks, if you look at Kinross or some of these, they've already like they're way like doubled their 2020 peak. So these have been the laggards. Nobody's been looking at them. They're starting to take off again. It's not, it's not the bottom of the first inning anymore. They're moving. By the way, there's one other recommendation I'd like to make. So Sprott has a silver stock ETF, which I think is fantastic. It's the ticker is SLVR, and it contains a lot of the silver stocks that the model likes. I think they've done a fantastic job of packing that thing, and it's very low market cap. It's not very large, but I think the more money that goes into silver and that goes into that ETF, the more some of these mid-size other ones below the smaller and mid-cap stocks below the ones that, market cap level of the ones I've already told you about. So that's another, if you want a diversified silver play, I think the best one out there is the Sprott Silver ETF SLVR.
That's excellent. Yeah. First Majestic's obviously a part of that one. Just looking up the list of those companies on here right now. I think trying to find that list without taking too long. And those are just a bunch of his stocks that he's obviously invested in. Yeah.
So Sprott, they know what they're doing. Okay. They have really good analysts. They know the company fundamentals. They talk to them. They know what their mine prospects are. They know what their exploration prospects are. They know how to pick stocks. Sprott knows what they're doing. Okay.
Oh, yeah.
They have picked, I think, a really good bunch of silver stocks that align with the model forecast. So the model likes the stocks that are in that ETF, and whereas you could get hurt by owning one single stock that blows up, the mine gets flooded, the government does something, in a diversified basket of those things. If you like silver, I think that's the place to be. SLVR ETF. It's got a bunch of really great stocks in it, and it's under-owned. It's starting to move up. It's moved some, obviously. Again, it's not the bottom of the first inning anymore, but I think it has a long way to go, and it's a good pick for playing the silver stock rally.
And do you have any, price targets for silver?
Well, so it just hit $50, right? So that's that was the all-time high from way back when Hunt Brothers, when they tried to corner the market. So, but if you look at it inflation adjusted compared to then, now it's like that would be hundreds of dollars, not 50. So it's not, to me, it's not a double top. It's just getting back to where it was. It's just starting to catch up. So I don't know. I don't want to be too over exuberant and ecstatic here.
Of course.
But I would say, again, buy the dips. If there's pullbacks, I think that there are people that have missed this rally. The central banks will keep buying gold because they are diversifying out of foreign exchange reserves. So gold is actually the second biggest reserve for central banks globally now, ahead of the euro. And it's almost equal to US treasuries.
Yeah.
So whereas years ago, you would say gold, the barbarous relic, and the central bank of the UK sold most of their gold at the bottom when Gordon Brown was the head of it. So it was despised. Gold was out of favor. It's completely changed. So now they realize when the Russian reserves were confiscated after the invasion of Ukraine, a lot of these other central banks, who I don't want to talk about because some of them might end up being my clients or my clients. Anyways, they looked at this and they said, "Wow, that could happen to us. If they do something, you look at us the wrong way, you're going to start confiscating our foreign reserves." So they said, "Well, what can you not confiscate? It's gold." So gold is the asset. It doesn't depend on somebody else's credit or some default or something.
Right.
So that's gold bugs have known that for a long time, but the central banks have become gold bugs now. So they are buying. It's not just China. It's emerging markets. It's everywhere, and they will continue to buy, and they will continue to rotate out of foreign exchange into gold. So that's the major driver behind the gold, the physical gold rally, which will continue to lift the price of gold, so that the margins on these gold mining and silver mining companies are just enormous, and they're not going to go away anytime soon.
No, it's such an exciting time for the sector. Well, I don't want to spend about 20 minutes. I want to take up any more of your time. I really appreciate your input and naming off some stocks that we should all be paying attention to, especially that Sprott ETF. Actually, a company on that list I'm a long-time investor in, and BlackRock Silver, which is one of my favorites.
Right.
Yeah. So yeah, there's a good list of companies on there, which is a great starting point. Sprott obviously invests in a ton of companies, very involved in a lot of, and he'll identify great companies, and he puts, he really places his bets pretty high and puts in good sizable investments in them. So if you're interested in silver, I think that's a really great place to start. So I think that's a really fantastic recommendation on your behalf. But yeah, anyways, I appreciate your time today, and I just want to say thank you again. And I would love to have you back as we continue this, mining bull rally, this resource gold and silver rally. It's really exciting to see where it goes. And someone actually said that they would, I can't remember why, but they predict like about a $90 silver, which was a conversation that I had at a conference on the weekend. And if that's the case, then there's still a long way to go in the space.
That's right.
Yeah. Amazing. Well, thank you so much.
My pleasure. Thanks for having me.